be able to see and hear me, put it into the chat box to let me know you can. Equally importantly, please tell me where you're from. It's just to make sure you understand this is an interactive webinar. I'm going to put polls on the screen as and when I can, and then share the results with you so we learn from what everybody else is thinking and what I am thinking for the year ahead. Now, the content for this comes from my experience in the hedge fund industry. I'm not a big player, so you might say, well, don't care about what you think, Alpesh. It also comes from all my expertise and experience from having written various international bestsellers for the Financial Times. So I'm going to put all the best bits of that in this webinar. As I say on every webinar, please therefore make sure your doors are closed and you've got a pen and paper and a camera phone so you can take pictures of some of the slides. Also from this, again, published by the Financial Times, Lessons in Trading Strategy from the World's Leading Traders, and you'll get a free copy to download as well during this webinar, where I interviewed 10 of the world's leading traders. So that's where I'm taking my knowledge from, not just my expertise, because you might not care about mine, but from 10 of the world's leading traders, people like Bill Lipschutz, Global Head of Foreign Exchange at Salomon Brothers, David Kite, now in the UK Rich List, former floor trader, Bernard Opity runs a $2 billion, actually more, hedge fund, and others. So they were all in the books, and that's how I got to meet them when I was a young student. And that's how I learned to trade and then eventually set up my own fund, because when you got mentors like that, you would. And I'm just passing that knowledge on to you because I've been passing it through books for many years. Great. Neil, you're watching from Leeds, my hometown. Hi, Alpesh, Watford, Hornchurch, fantastic, fantastic. And let me know where everyone else is from. I know we're going to have a load of people from different parts of the world as well. Welcome, Jonathan, Graham, Roland, Simon, Carl, Louis, Andrew, Edward, another Andrew, Robert, Mike, Barry, Dale, Alfredo. Won't run through everybody. Mukesh, welcome as well. I'm going to share the screen. We've got a heck of a lot to get through. I know your time is invaluable, and so I am going to get on with it straight away. You should be able to see the screen there. Now, whilst I've said trading in falling markets for a great 2023, of course, the markets were falling last year. Now we're looking at, even with the FTSE, and I'm going to share what's happened with the FTSE. If any of you followed me on my Telegram channel, and I'll show you how to get onto that later, or my Twitter or my LinkedIn, you'll have seen that I showed an image of this earlier. And that's just ridiculous. I did not make that happen with the FTSE. That's the FTSE 100, 15-minute bars. I'm just showing a standard free retail platform, which is broker independent. This is MT4 for those who don't know. It's broker independent. It's free. Okay. Two very important things. And it's live. Okay. So it's live, real time, free. And broker independent. So my point is, and we'll talk about the mechanics of these things later on, but if you look at that, you see from here on February the 10th, okay, and that just happens to be the FTSE, but I'll mention others as well. Now we've got a sell signal there, all right, so, and that just happened just before this webinar started. Each one of these bars is 15 minutes, so that's the sell. But actually what I want to show you is this. It has just been ridiculously moving in simple trends. You can see that short trade, a down arrow anytime on this webinar means to sell short. Now I'll show you how we decide when to get into a trend, a business plan for you, everything you need to know for a good trading process in this, all the knowledge from, the books as well, the 18 odd books that I've written and my experiences as well. But just to give you an overview of how ridiculous so far February has been. Okay, you get this one, which we were in a bit late, sorry. We got the signal to get in the trend there. It wasn't a huge gain, but you can see the short trade there, and you see a long one there. That turned out to be good. That short was only for a short period of time. This doesn't usually happen. You do not get a winning streak. Think of tossing a coin heads 10 times in a row. That doesn't happen. It's not the norm. So I just wanted to point out that whilst this has been happening in February, and it's not just this instrument, because it's happening with others, and I'll show you that as well. For some reason, the trends are just a bit smoother. You can see the long there, you see the short there, and it falls off a cliff. And previous to that, you got the long there. So it's been a case, and that's going right to the start of the month, of long, short, long, short, long, short. Now, that does not usually, you don't get those kind of patterns in the markets. Normally, I mean, you don't need me to tell you that. Markets tend not to have such consistent patterns. So what does it mean? Well, it means while the going's good, we want to fill our boots. I mean, that all the way down there, I mean, we didn't get every top and bottom. We never would. We don't have a crystal ball to be able to do that. And I did not make that market go up like that in a straight line, right? And it's not as if it's some esoteric market. It's the FTSE 100, for goodness sake. So the point is, okay, well, when these opportunities arise, the issue is how often do they arise? How do we get hold of them? You said it was a free broker independent retail platform, MT4. You can get it from anywhere. Just Google it, actually. So how do you turn that into a business process and decide whether or not trading's for you? And if you're already trading, as some of you are and you're experienced, how do you increase your profits? And for those who've never tried it before, how do you start with a demo account so you're not risking real money? Never risk real money when you're just starting out as a beginner. And how much might you be able to make so you can decide if it's for you or not? In fact, at the end of my webinars, if I get a bunch of people saying, trading's not for me, thanks very much for showing me what's involved, it's okay, not for me, that's perfectly fine. And by the way, in the course of this webinar, we are going to go through FTSE, Apple, Amazon, Microsoft, Bitcoin, Ripple, JP Morgan, Google, S&P 500, sterling US dollar or cable, sterling Japanese yen, which has been another ridiculously smooth one. Don't ask me why. And then some of the more difficult ones like Brent suddenly isn't that easy to trade, I'm afraid, which is why I'm going to show you, well, what's the process? And you need to know this almost like, when you were at school. Okay, how many instruments? What should I monitor? For how long? How often? So that I can have a life. The whole business plan shebang will come in. Okay, so first things first, please be warned, this is not financial advice because I don't know your personal circumstances. So don't just look at that and say, oh, you know what I'm going to do? I'm going to go buy, just turn this on. I'm going to buy a load of FTSE 100 futures or CFDs or spread bets or cash market, whatever it is, or options, because I don't know your individual circumstances. So it's educational, it's informative for you to then take on board. Now, first things first, problems in trading we need to solve. Let's start off. The webinar is done in a way. Lisbon, Louis from Lisbon, Alfredo from Wood Green in North London, St. Albans. We got Mexico, Jay from Mexico. What the heck are you doing out in Mexico, Jay? It's early morning for you. What we need to solve first, the problems and then the solutions. All right. Now, first thing, I want to drain the swamp of Muppets like this. When I wrote Trading Online, okay, when I wrote this book, 25 odd years ago, the first edition, it became an international bestseller. Financial Times published it. It was okay to say you're trading online. It was something you could be proud of because the FT would do it. I had a show on Bloomberg TV talking about trading online. Now, my God, you go on Instagram, I've got a whole bunch of scammers messaging my followers on WhatsApp and asking for Bitcoin. And those people contact me saying, did you send this direct message? I never send direct messages to anybody. All right. So just so you know, or on TikTok doing the same. Scammers and fraudsters and all the rest of it, the swamp has become full of people like this. So part of what we're going to remove is that. And to that extent, what I say is, look, do your due diligence on anybody and everybody. For me, go to my LinkedIn. Okay, I think it's a pretty good way to do due diligence on somebody because you'll see who they're connected to, who their followers are. If you've got somebody who's being followed and commented on by the CEO of various banks and politicians, all the rest of it, doesn't guarantee the person knows what they're talking about, but it should help. All right, so do follow me on LinkedIn, whatever you do, and also because I write articles there about trading and investing and all the latest stuff, and there's a lot of free material I put on there virtually. So that's just virtually every day. So that's just part of the whole shebang of just doing your due diligence on people, because it worries me. And you've seen that I did a trading post this morning, and very often I'll do ones on all sorts of different subjects, mainly around trading or investing. We hit 100,000 people on TikTok, so sometimes it'll be personal stuff like that, but other times it'll be useful. So just follow on LinkedIn and you can find the links to that, and you'll also get to see the other stuff that I do, both within government and outside of it and all the rest of it. Okay, so enough of that. Now, some people, what if somebody's not on LinkedIn? Well, go find them from, I don't know, Google search, but that's a bit random. Okay, so that's first things first, and you can find that on alpeshpatel.com/links, which is where you will also find copy of this to download. Mind of a Trader, Lessons in Trading Strategy from the World's Leading Traders, completely free download. Okay, because I want people who come on my webinars to be absolutely mind blown and really happy and say, yeah, I'm really glad I went onto this. The other problem we're trying to remove is subscriptions. I hate subscriptions because you know what? They're like a mortgage. They just keep taking money out of your pocket every single day, week, month. So we're going to get rid of that problem. And I hate brokers. Basically, brokers, one way or another, are trying to rip you off. and people who say you've got to go to a certain broker are getting kickback. So in the Q&A, we're going to discuss brokers. You're going to have to use a broker, right? We're going to have to use an FCA regulated broker. We're going to have to, but we'll talk about brokers right at the end and see if we can solve that problem. One of the other problems and why I continue doing these webinars is it's part of my campaign for 1 million, to teach 1 million people for free how to be better at investing and trading, because that investing and trading or the financial markets determine your mortgage rates, determine how much you're going to have in your pension. They run our lives. And I think people just don't have the financial education. So ever since I've been writing those books, effectively, when I've been doing my talks, and you might have seen me at various talks around the world and mainly in London, but everywhere from New York to Los Angeles to Hong Kong, I have thought, well, wait a minute, why not just call this something? Call it where you actually are giving that hand-holding help. All right, so this is all part of that. My main reasons for trading, because you need to know what my motivations are, and money is part of it. It started off with that. When I was training as a barrister, I was earning about £6,000 a year. Yeah, and you might find that shocking, but if you look in the news, you'll see barristers are striking, and now you can see why. So I left that to trade because I'd already had an interest in finance. From there, and for you guys, it has to move into fun. It has to move into fulfillment. It has to move into freedom. And, well, hopefully it'll move into philanthropy, okay, eventually. That's why the business plan I'm going to show you is important, because if you can't get the process and the business plan right, you'll never mind not get the funds, you won't even get the fulfillment, fun, or freedom. Now, at the moment, a lot of people are looking at side gigs, entrepreneurial ventures. I get people saying to me, oh, I'm trying to sell stuff on Amazon and all the rest of it. I think trading is the most entrepreneurial job to do. And I'll tell you why. 2 sets of statistics. Why? One, all businesses, taken as a whole, 90% of businesses fail within 3 years. 90% of businesses. Now, that's not just a British statistic. It's a British, French, American statistic. Whether you're in the US, France, or the UK, 90% of businesses fail within 3 months. In trading, we know, and I'll show you the data later, that about 60 to 70% of people lose money. That means 30% are not failing. So how do we make sure we get into that 30%, which is better than other businesses? The other reason I like trading as an entrepreneurial venture, other than the reason I put on screen there, is no office costs. There's no cash flow problems, as in, oh, I've got to get a supplier to provide me the things. I've got to warehouse it before I deliver it. Bad credit, the person didn't pay me. Advertising, marketing costs, there's none of those, because the markets are as efficient as you could get. They are efficient in the sense that you don't need to advertise that you're selling Apple stock or FTSE 100 options or whatever, or CFDs, because the marketplace is already looking. Okay, so I love it as a business. There's no insurance, there's no, as I said, warehouse costs and all the rest of it. So how are we going to do it? These are the numbers you need to know. These are the numbers you need to. Colin, I absolutely love Belfast. I just think it's so underrated and people don't realize. Spain, fantastic. We've got somebody from Lisbon and somebody from España. Fantastic. These are the important numbers. So let's start building that process, and then let's start looking at the individual trades that we're going to be looking at for all of this, okay? So we're going to start off with those numbers. Now, how do we come to that? How do we come to that? Whether it's the FTSE 100 that we're looking at over here, or whatever else it might be like, whether it's Apple over a longer term, you can see that we had a long indication there, and that's the 4-hour bars. And my favorite time frames are 15-minute, 30-minute, 1 hour. Even if you've got a day job and you don't have time to monitor the markets, I'll show you why those time frames are fine. If you're looking at longer term, and some of my students have said, well, actually, I just want slightly longer term trends, which might last, say, a month or two, then it's the 4-hour bar, okay? Whereas the others are there if you want to last about 2 to 3 days to a week, the trends and the trades. And I'll show you what the maths looks like in terms of, well, if we trade 1-hour bars, how much money might we make in a month, and what's our downside risk? Like any business, you need to know what's your worst case outcome and what's the average and what's the variable between best and worst, so you can allow for the worst case scenario. Nobody ever worries about the best case or having too much money. We need to worry about, well, what happens if we lose? What if we have a string of losses? How do we look then? That's the most important thing. So as you can see, we'll go through all of these things. So how do we convert these numbers onto that trading platform? And you can use any broker to place the trades through. This platform, I chose MT4 because when I used to write my Financial Times columns in the newspaper, I try and find free things for my readers. So this is all the data you see in the charts are free. Okay, so, and you can execute through any broker you want. So you might have a favorite broker. It might be a Saxo, a CMC, an IG, a City Index. I don't know. Okay, I'm just naming brokers, and we'll talk brokers in the Q&A. And you can place the trades. But how do you get from the knowing when to enter, when to stop, and the process and the business plan to all of that stage? So let's break that down in this webinar. I suggest we scan the markets for 15 minutes a day max, or you could do an hour on one day, right? I'll tell you why. I'll explain why. Why not longer? Well, what we found is, and we've done experiments on this, and we did experiments because Pat Arball, the floor trader who was chairman of the Chicago Board of Trade, who I interviewed for this book, Mind of a Trader, Lessons in Trading Strategy, he actually put me onto that idea. He said, you know, when he's training up traders, and that's what we do in the hedge fund, we train up people who are fresh out of university because they're cheaper to hire and we can't afford more expensive people. He said what he found is when they were spending too much time in the pit, either they traded out of boredom or they actually managed to make some money, in which case they then got cocky and arrogant and lost it by trading out of over exuberance, or they lost money, in which case they traded out of revenge. All three things are bad. And he said the only way he found of limiting those three problems was to limit their time in the pit. Okay, now they didn't spend 15 minutes, they spent about 2 hours in the morning, and that was it. Job done, bugger off home. Okay, most finished by about 11 a.m. Nice job if you can get it. The point is, we're going to scan for 15 minutes, 12 to 20 instruments. Why 12 to 20? Well, if you only scan one, you might not get a decent trade that day. It's like going fishing. If you have a net, you're going to catch more than if you've got just one single rod. Okay, we're going to look for one screen. You don't need multiple screens. I know people like to show off with lots and lots of screens. The reason I have multiple screens is I've got different things I have a calendar on one, and I have maybe a TV channel on the other, and then obviously emails on another, and then markets on another, and so on. I don't need to be looking at 6 markets. I've got people who can look at different markets for me anyway. 1 trade per day or 5 per week. Okay, is what we're going to look at. And you might say, no, Alpesh, I want to do 100 a day, because the more I bang the keyboard, surely the more money will go into my bank account. Not so, and I'll show you why. Okay, and by the way, that works out at 20 a month, and I'll show you in the business plan why that's ample. Take this one. Oh, Alpesh, that's from the 10th of Feb, and it was still long until today, Valentine's Day, 14th, when it's just shown a short signal. Oh, but I wanted to trade that like crazy. Why? Why did you just not want to sit back, put your feet up? Because the trend's just going in one simple direction. I mean, that is unusual. That doesn't happen normally, okay, just so you know. The market, certainly an index like the FTSE, does not just do this for 4 days, normally. All right, so I don't want you to think, oh, that's typical. Wow, Alpesh, you must have some magic software. No, we didn't make the market go up. I wish I could make it go up like that. But what I'm saying to you is it's a classic example of why you don't want to be banging the keyboard, because you'll be working like a gerbil on a hamster wheel and got nowhere, whereas the tortoise, which sat back, won. Sorry for so many mixed metaphors there. Okay, so, and we'll go through all of this in more detail as we progress. 1 screen, 20 trades per month. And I'm going to show in the business plan how that's going to be ample. So what I'm actually saying to you is I'm going to take you away from the computer. Now, brokers don't want you away from the computer, and they certainly don't want you away from your telephone, because like any other form of social media, the further you're away from them, the less likely you are to trade. They want you more in front of the computer. They want to be sending you notifications, alerts, signals. Have you ever wondered why they're the ones with the private jets making all the money and you're not? Well, because they're the ones who are forcing you to be in front of the screen all the time. Actually, you place the quality trade and you leave it. Oh, but Alpesh, I want to do hundreds of trades. No, we're going to scan each of these for one good quality trend as and when it might arise. And when it arises, like, we get a signal saying, oh, there's a trend about to start. And if the price, and we don't have to be in front of the screen when it happens, it might be that the price is still near there when we do see it. Okay, and in good trading strategy, if we miss that one, fine. There's others. There's ample others that we'll get our hands on. That's the Amazon one. Okay, and by the way, as we, during the course of this webinar, go into the US market open, we'll see some good movements and we'll see how things pan out for us. But the point is you don't need to be in front of the screen all the time. You'll pick one of those, which in the 15 minutes you're looking, something will show a trend following. That's the one. boom, and then leave it. And I'll again show you why I don't want you over trading. Everything you're going to hear in this webinar is going to be completely contrary to what you've heard anywhere else. I'm going to be telling you to trade less. I'm going to be telling you to trade on a demo account. I'm going to be telling you don't trust the brokers, whereas the brokers are going to tell you you can trust ours. Okay, I'm going to be telling you need one screen, not four, and you need to spend less time trading, actually. Okay, and then I'm going to show you the business plan and what it looks like, and I'm going to show you how much you can lose. No point telling you how much you can make. You know how much you can make. You can make an infinite amount of money. No point telling you that. Better to tell you how much you might be able to lose it. Now, if at the end of that you say, hey, this is interesting, I think I still want to give it a go. Great. Now, another problem, as I've already said, all these trading academy, trading college, trading school, trading university, what are they going to have? Trading nursery? Somebody's going to come up with trading nursery. Actually, it's a pretty good name. Somebody's going to come, and they think that makes them legit. Just be careful. Just, as I said, LinkedIn it and see if they've got any credentials to begin with. So we asked people, why do you think you can't succeed? Because that was the problem I'm trying to solve. Remember, we're talking about problems and how do we solve them. So why do you think you can't succeed? And when we did a sample, just a small sample size, nothing scientific amongst the people who follow me, not enough money. Okay, fair enough. I can't just wire money into your account, but at least you can start learning on a demo account so that when you do get more money, or if your demo account does well, then somebody's going to give you more money and you'll know whether or not it's worth having more money. So the not enough money is not something I ever worry about. Not enough time? Well, the process we use is to actually use as little time as possible for a very simple reason. Again, there's an article I wrote in the Financial Times and I republished it in Trading Online, okay, which the FT, as I know I keep mentioning the FT published, it's just because we live in a world where if you're going to drain the swamp, you've got to keep repeating your credentials. So what happened is, it was about return on time invested. It's not about your return time invested. And I discovered that most people who are trading were better off on an hourly rate basis working at McDonald's because they were spending so much time in front of the computer, so much time just looking at the market, that by the time they made any profits on an hourly rate, it was just pointless. What's the point? Okay. And then no good simple strategy. Well, I'll show you. We have 10 strategies in the hedge fund. The very first one is a simple trend following one, which was taught to me when I met Bill Lipschutz and some of the other people from Mind of a Trader. And that's still the oldest and first one. And I'll show you the rules for it. And sometimes people say to me when I mention this on social media, they say, oh, we can set up a fund and put you out of business then. And I said, well, if you can work out how from me telling you the rules that would happen, please do. Try and raise money off the back of I've got Alpesh's strategy. It just won't work. It'll work for Alpesh. It won't work for you. Okay. People won't give you money just because you've got the same strategy that we use. They'll give you money if you can show, oh yeah, that's a good consistent return you've developed. Then they'll give you money. Targeted income. This is what we're going to go for. We asked people, what do you want? It was good to see most weren't greedy. Most weren't greedy. I'll just end this poll, by the way, on the FTSE. Will be high by the end of 2023 from these levels. 72% are bullish. They believe so. Okay. Imtiaz, thank you, my friend, as well. Now, is there a good broker for shares? You've already asked. Mike, I'll do the brokers at the end. Mike from Middlesbrough. I'll do the brokers in one go at the end. So I'm not moving around too much now, and there are many brokers I recommend for shares, 500 to 1,000, and I'm not sponsored or by any of them or anything else, so I don't have a conflict of interest. So I try and keep conflicts absolutely to zero because then you can get what you want. 500 to 1,000 a month. Now, is that realistic? That's what we're going to try and aim for. Some months we'll get more, some months we'll get nothing or losses. But on average, if you take the sums from when you have a really good month, like February, unexpectedly good, okay, away from the months which were bad, like last September, if memory serves, okay, then you should average out, right? Because it's not a bank account where you're guaranteed that sum. I wish it was. I wish you could just be guaranteed you're going to make exactly that each month. It's not the case. There is no fund in the history of the world which has always had the same return, unless it's just purely putting the money in a bank account, okay, or Bernie Madoff, right? So 500 to 1,000. How realistic is it? How much money do you need to start off with? How frequently will you have to trade? So we're going to put all that in. Now, I know why you're here, because you might well have seen stuff like this. I don't know SpreadX, by the way. I'm not endorsing them, never met them, don't know anything about them, never heard anything good or bad about them. But we found this about a few years ago when I was writing a book on who wins in trading. Is it men over women? Is it longs over shorts? Is it currencies over stocks? Is it indices in the morning? Or what is it? What time of the day? You know, if you hold an instrument for more than 2 hours, are you more likely to lose than not? So we wanted this edge from mass data to see if then we'd get an alert. You see, we'd say, oh God, if you're going to trade this between these hours, you're more likely to lose money. And if you hold a certain instrument longer than 3 hours, you're more likely to lose than profit. You know, red warnings could come up to my team and they'd say, oh God, we better start thinking about exiting or whatever else. Okay. So when we were writing that book, and I'll share some of the findings during the course of this webinar, came across this. We're not going for any of this. Okay. So forget cloud gaga, you know, dreamland. These numbers will be legit. I mean, they're a FCA regulated firm. I'm sure these numbers are truthful. The point isn't that. And that's why people are coming at. The point is you're going to start with a demo account with no real money. Why? Well, think of it this way. Imagine you're learning to drive. Would you start off on the motorway? No, because you might crash and die. And I don't want you crashing and dying in trading. And nobody's going to switch the markets off, he says, at a time when we're shooting UFOs. The alien warfare, I'm sure, is bound to begin anytime soon. But the point is, if they're not shutting the market off, we can wait and learn and start on a demo account first. Patience, patience. I know it sounds like your dad. Patience, or your mum. Patience, son. So important point. It does not matter what you buy and sell. Profit is profit. Now, I want to get this out of the way because occasionally I get somebody in the chat box saying, oh, I like to trade gold, or I like to trade Google, or whatever. I do not care what these things are, what these instruments are that we are trading. I just don't care. That's the S&P 500. And rather like the FTSE 100, it is going in just now a straight line. Now, oh, Alpesh, you must know why. Well, I can take a guess, but I don't care. We are trading the trend. This is not about investing. This webinar is not about investing. This webinar is about trading. Okay. So we're just following a trend. We're not trying to outsmart the market. Did I know it was going to go up at 8 a.m. on yesterday, 13th of February? No, I didn't know it was going to go up. What I did know is, were it to go up, I know what to do. Okay, we know, oh, we better press buy if it's going up, and we better press sell, and we better know where to put our stop loss and where to add those dotted lines, where to add to our winning position. I'll break all that down for you. Don't worry. Okay, so I don't care that was the S&P. It could have been the FTSE. It could have been Brent crude. And I could have either gone long if it was to buy low and sell high, or short, sell high, then buy low later. Never pay subscriptions. Anybody who's charging you subscriptions has a conflict of interest with you. They need to keep you on that drip. It's a bit like a cocaine dealer. They just need to make sure they keep you on. They don't have an interest in you becoming independently profitable, okay? Because you'll end the subscriptions. You don't need them if you're independently profitable. You might say, oh, no, I still do because I need their data. Well, it just shows you the data and the prices and the charting you can get for free. So what do you need them for then? What is it that they're giving you on a subscription? Avoid any service tied to specific brokers. And I'll tell you why. And it's, I had to think about this. And I said, you know what? If somebody is getting a kickback from a broker, then they're sharing in your losses. It's as simple as that. They're sharing in the losses you make. The broker splits them with the person getting the kickback. So they'll say to you, hey, use our trend stuff and use our broker. And they're going to get a kickback, and they've got a conflict of interest, and they need you to lose money. Okay? We need you to make money. You've got to be with somebody who needs you to make money. References must come from industry leaders. Teachers should be the world's leading traders. My teachers were from this book. Okay, I didn't invent trading. I didn't invent anything I'm going to talk to you about. I didn't invent a single thing of it. I just copied what winning people were doing. In the same way, if I want to learn tennis, I'm going to watch, I don't know, Martina Navratilova or Ivan Lendl or whoever. Okay, well, not now. I mean, you know, old videos when they were playing tennis. I mean, now, obviously, you know, walking around on the Zimmer frame is not going to make me a good tennis player. The point is, I just got the leading traders of the world and copied what they were doing. So for me, that's who my teachers were. Right now. So as I said, we've got two decisions to make. Very simple decisions with any of this. Sell. Okay. When to buy, when to sell. That's it. When to buy, when to sell. But as I already said, 66% lose money, 66% lose money, 61% lose money. I've taken 3 different screenshots from 3 different brokers. I think it was IG, CMC, and Saxo I took. And that's how many people lose with those. But that, on the flip side, means that 30% plus are making money. So how do we do it? Given that you've only got 2 decisions to make and you've got the same data as George Soros has, because basically the prices he gets and you get are roughly the same. You might get a slight discount and a smaller percentage of commission compared to his trade size or whatever, but probably going to be roughly the same. That being the case, okay, that being the case, how is it that 50-50 isn't win-loss? How come so many are losing money instead? How come that's the case? How come so many lose money? And that's what we're going to remove. Okay, I'm obsessed with making sure we don't lose money, right? So imagine, I've taken this from a previous period. You've got a short signal there and the trend's likely to form. We'll work out how you get those. And you've got a long here, okay? Now, the only thing between you and a hedge fund or a George Soros or anybody else or a super rich person should be not the data that you've got, not the prices that you see, because they should be the same, not the decisions you have to make, because they should be the same, when to buy, when to sell. It should be just the capital you've got. And you might say, well, that's a big bloody difference, mate. Yeah, but if we can just focus on your skills, then we can worry about how to get more capital later. Trader 1, doing the same trades as you, will make £500. Trader 2 will make 5,000 because they've got more money. Trader 3 will make 5 million because they've got more money. That should be the only difference. It should not be know-how, knowledge, any of those kinds of things, because we can remove those. We know we can close the knowledge gap because the same people told us what it is that those funds do. Okay? And that's what I'm going to share with you here. Similarly, what instruments? Here's a list of a whole bunch of instruments. You've got everything from foreign exchange to stocks like Disney, eBay, Ferrari. You've got European stocks like BMW, Bayer, Repsol. You've got cryptos if you're into that. And we'll look at cryptos in a second. You've got commodities like coffee, okay, as well, sugar, live hogs, if that's what floats your boat. Okay, basically, if the prices move, then it can be traded by trends, because prices will have trends. Ultimately, this is what we're going for. Let's take a look at, it wasn't the last month, it was the first month, beg your pardon, the last month of 2022 S&P 500, the last month of 2022. Okay, so the last month of last year, where the markets were still pretty ugly. And this is typically what should happen. Any good strategy should be such that if you have losses like there, which was telling you to go short, the losses are small in size, short in duration. And you can write that out. If your strategy, whatever strategy you're using, and I'll show you the one that we use, the losses are not small in size and short in duration, S plus S, write that down, okay, then it's not a good strategy. Equally, if when you're wrong, like I said, or you have wins, you will get some small wins. That's a small one, it's a small, nothing to write home about. But it should be able to capture bigger trends. See, nothing to write about. That one, bigger trend, bigger trend, bigger trend. It didn't make those trends. It didn't make those things happen. It tried to capture them. Now, several important points. That's not a typical month because there are significantly more wins than losses. Even if there were just as many wins and losses, the wins should be bigger on any strategy than the losses. The losses should be small in size, short in duration. That should be the reality of the situation. And some big trends you'll just miss. It'll just miss. Your strategy will miss, and that's fine. And one of the mistakes people make is they think they've got to be right all the time, and they think they've got to be able to get every single trade and exactly at the top and exactly at the bottom. Those unrealistic expectations blows them up, and they spend too much time just navel gazing, right? Or take the big oil drop, 85 to 78. Now that's 700 points. That doesn't matter whether you're trading futures, options, CFDs, spread bets. Everything gets translated into number of points, dollars, cents, okay? And how much you're going to make on the rise or the fall, whether it's the spread bet or CFDs or options or whatever. It's always the same. At $10 a point, you're not going to do $10 a point. You're not even going to do $1 a point. I want you starting off with about 8 cents a point. And we'll talk brokers which allow you to do that. Okay, at $10 a point, that's $7,000 trade in a day. That's what an experienced or or an ultra high net worth would do. So just so you know where the context is, because sometimes people ask me, how much can you make? Well, if you're an ultra high net worth, and that means multimillionaire, you're probably going to do $10 a point. Or somebody who has accumulated their profits over a number of months until $10 a point from their accumulated profits, not their hard-earned capital from their day job or their retirement or, God forbid, their pension or their mortgage. They've built it up over a period of time. They might build up to $10, okay? Ultra high net worth, or you've built up your profits over a period of time. You are certainly not going to do that on the first day of trading and just think, oh, I'll just take it out of our savings. No, that'd be stupid, because just as you've made $7,000, you could lose that in a day trading those levels, because you won't know what the hell you're doing. You might not have a stop loss. You might not even know, or the market might just gap lower, whatever. That's why we're going to take that cautious approach of either you're an ultra high net worth and it's peanuts to you, fine, fair enough. And we'll look in the business plan what proportion of your capital should be in a trade, or you've built it up gradually. And with my students, I want them to build it up gradually, the profits, until this makes sense. And they're risking profits, not hard-earned savings, okay? In any event, a demo account. So let's take Forex and crypto 2023. And what I've done there is I just took the start of the month, the first week of the year, right? And this is in Bitcoin, 15-minute bars. You might not like Bitcoin. I couldn't care less what's moving and what we're trading. That was a 100-point drop, 170-point rise, and a 250-point gain over there. Okay, so that was 520 points. If that was $10 per point, because you're an ultra high net worth or you've built up profits, that's a goal. And so people say, how much could you make? Like I said, zero, because you're going to be on a demo account to begin with. How much might you make? Well, your eventual goal might be to make as much as an ultra high net worth or somebody who has accumulated so many profits over a number of months. So how do you know how long that will take? The business plan. So at least you've got a goal of where you want to be, and it's well into the future. For many, this will be, if they're just starting out today, I would say, oh, give yourself at least a year and probably 3 years to get to that level. Why? Well, because you're just starting out as a beginner. You're not going to go to that this week. Okay, simple as that. Right? So how long would it take to earn enough money, and what should that be? That's the business plan. We're going to come to the business plan, and then you can decide whether it's worth it or not. Whoops. Or this. That was 300 points. These fell. That's sterling US dollar. And then this rose. One of the reasons why I like a computer telling me when a trend is either up or down is because it removes emotion. Otherwise, I've got to go from being short sterling to being long sterling. That's a lot for the human brain to sort of turn around on. Okay, 300 points, $10 per pip, 3,000 in a day. That is going to be an ultra high net worth. As I've said, I'll repeat myself before people get carried away thinking, oh, we're going to make so much money in a day. Or it's going to be somebody who's built up the profits. And as I said, without repeating myself too much, that's what we're going to go through. Longer term, protect you from S&P 500 gyration. So you might also, this is the US S&P 500. There are people who will short this based on shorter term trading because they've got a big exposure of US stocks in their SIP or ISA, as I do. And I might say, oh, actually, I'm quite happy to short the S&P because I can see we're going to fall for a bit. I don't want to sell all my investments. I don't want to trade my investments. I'll trade the S&P because I'll make a profit whilst the market's falling. Okay, so that's another reason to do it. That's a bit more sophisticated. This is what your trading's going to look like. Okay, this is what it's going to look like. Out of every 100 trades, my job today is to make sure you don't have any big losses. And I'm going to do that by showing you how and where you put your stop losses. Microsoft. Somebody just asked about Microsoft. There we are. Okay, so we had that 3 days ago at $237, I think, roughly. It's now at 269. Again, this is relatively unusual to get a trend over 3 days, which is just in one direction. I didn't make that happen. I wish I could, but I didn't. But more importantly, there's another important lesson here for trading strategy. Any trading strategy you use, and I'll show you, like I said, this is one of our 10 in the fund. I'll show you how you can copy this. It's the first one, which I didn't invent it anyway. I just copied what Bill taught me from Mind of a Trader. Notice how the price is still skirting after, sorry, that's 11th of January all the way to the 24th of January, and now we're all the way up to 14th of February. Notice how, so it's over a month, not 3 days, over a month. Notice how over from the 13th to the 24th, about 2 weeks, the price is still near the entry point. That means you could enter at any of those points. So a good strategy should be such that it gives you ample time to enter. It isn't just, oh, now you've got to enter this microsecond. Well, what if you're not in front of the computer? It should be one which says, look, the setup looks positive. If somebody puts a light under this market, it's going to go like a firework. Or it's going to, if it's a short, oh, somebody puts a straw on the camel's back, the camel's going to break and fall. It's going to short and collapse. We're going to make sure you don't have big losses. Most of your trades will be small losses and small wins. In other words, most of your trades will cancel each other out and there'll be a complete waste of time. So you might say, well, Alpesh, wait a minute. Why can't you write 100% of the time? Why don't you write 9 times out of 10 or 8 times out of 10, 7 times out of 10? The only times we're right 10 times out of 10 is if, like tossing a coin, we get a winning streak. That doesn't mean the coin is special. Still a 50-50 coin. We got a winning streak. Now, we need to be a bit better than a coin, but not much, as I'll show you in the business plan. I wish we could be right 7 times out of 10, 8, 9, or 10. There's no hedge fund in the world which is. If you don't believe me, look at George Soros's trading diary in his book, The Alchemy of Finance. He's right 50% of the time, 55% of the time, wrong 45% of the time. Why is he wrong so often? Because we will happily take a small loss any day, even if the trade comes back, then take a big loss, which is what the trade could do if we don't take it as a small loss. And we'd rather take a small loss and get back in later to have our big win or small win. Okay, so what about the big wins? How do we make sure we get big wins? Well, one of the rules is winners add to winners. How do we make sure we avoid big losses? Losers add to losers. But I'll show you on the screens, on actual trades, what that looks like in the real world. Probably use JP Morgan, actually, because you can see all of that on one screen. So I'll do that in a second. Similarly, there's lots of choice. So how do you choose? Now, write this down. What I like to be looking at. Obviously, at the moment, the FTSE, but not normally. Not normally. It's just that it's so bloody easy at the moment. That won't last. That will not last. It'll go volatile again, and our indicator will be wrong-footed. Just happens. That's just life. But it narrows down what we should be focused on. I like the DAX, which I haven't got on screen. I like major versus minor currencies or minor versus minor currencies. And if you're wondering what's a major and what's a minor, there are only 5 major currencies. The yen, the euro, the US dollar, and sterling. Okay, 4. Can't count. 4 major currencies. Okay, 4 major currencies, and everything else is minor. So I like major versus minor or minor versus minor because the big banks are fighting out on the major versus major, and they cause too much volatility, and it just wrong foots us all the time. Okay, so I don't like those. Do I like crypto? Sometimes it's easy to trade, sometimes it's difficult. It's up to you guys. It's a difficult one to say, yeah, you definitely should or you definitely shouldn't. It's just one of those where it just is too variable. Okay, so for that reason, it's not one which I'm thinking, yeah, for sure, you should do it or not, or as it goes. Right now, I've got to show you some other stuff on this. This is what it comes down to. This is now the beginning of the trading strategy, and then we're going to do the business plan. This is what it comes down to. All trading comes down to this. Now, let's get rid of the easy stuff first. Mind. How do we get rid of, oh my God, I don't know what to do. Oh, I'm really ecstatic. I'm not ecstatic. What's going on? I'm happy. I'm not happy about all of these things. I just want to show you. Let's have a look at Amazon. It's neither good nor bad. Fell, but didn't fall as much as we would have liked on that occasion, and then it started rising, so it went long. This is where we are at the moment, and it'll probably I think it's going to hit $100 today, probably, by the looks of it. Okay, so if you look at something like that, right, how do you translate the rules of trading, which is where do I put my stop loss, how do I know when to enter, when do I limit order means take profit, when do I, if ever, take profit, how much money should I put into a trade, and how do I know when to add to a winner? Winners add to winners, losers add to losers. Okay, how do I know when to do that? So let me show you that. And you might want to take a picture of this slide. Feel free to pull out your cell phone and take a picture. Or, okay, you might want to take a picture of this next slide, which is one of the most important ones. It's not the most important, that's coming up. Okay, but this is really useful. There are, Selma, 5 things you got to get right. Okay, and I've just shown you, actually I'm going to show you this one because it's on screen. I've done it. Here's one I prepared earlier. Okay, so let's start off with one. Okay, you can see it there, volatility-based stop loss. Now, I didn't know that hedge fund managers in the world did this, and I didn't know until I met them for, I mean, literally the book says Lessons in Trading Strategy from the World's Leading Traders, and you can download it for free. As I said, I'll give you the links again if you missed it. I gave it at the start of the webinar. I'll give it again at the end. Okay, I didn't know they did this. I just thought they were just right more often than most, and they just went all in. You know, like you see in the movies, yeah, I'm just really good at playing poker and I just go all in now and again. I didn't know that actually they're scared senseless of losing money and they start small. So let's see what they do. One, volatility-based stop loss. So you can see the entry. We'll come to entry in a second. Okay, you can see the entry there. That's that green arrow that our system puts on. Everything else, the data, the share prices, is from MT4, broker independent, free. But our system puts in the green arrow. It also puts in the money management rule. We use this, initially we used it to train new staff in my firm. So if they've come fresh out of university, so they're cheap, we give them this to train them up so they can learn to trade with $1,000 of my money, because I can't give them client money. Obviously they're learning, I'd be fired. And also to tell them, it also just tells them as a training tool, it tells them where to, if I can find my mouse, for God's sake, where to take profit, or if they're beginning, I'll tell you when you take profit in a second, or add to their winning positions, what the stop loss should be, and stop loss and buy and all of that. It tells you everything there. So it removes all the menial tasks, because I want them focused on developing their trading skills or trade selection skills. So the first thing it tells them, most important thing, and that's why I marked it number one, is the stop loss, the S in Selma, the S in Selma. It tells them where the stop loss is. Okay, so they don't have to calculate it themselves. They could calculate it themselves if they want. If you want to know how to do it manually, you can pick something like an average true range at 2.75 times average true range. We don't actually quite have that. We have something different. It's more nuanced because we use lots of clever computing power to sort of tweak it. But you can use that as a good starting point for yourself. Okay, and if you don't know what average true range is, look it up. What it basically, on Google, what it is we're looking at this volatility in the market at the moment. And we say to ourselves, well, that's noise. And if I enter there, I don't want to be stopped out by noise, because that's just normal market movement. My stop loss needs to be further away, but not so far away, it's pointless. So you have a volatility-based stop loss. The more volatile the market, further away the stop loss. Got it? Point number two becomes volatility-based position sizing. Now, our system does the maths for us, but I'll explain the maths to you verbally so you can do it yourself. Okay, which is this. The further away the stop loss, the smaller the position size. So you don't lose more money just because the market's more volatile. Now that's genius. Why is that genius? It means every single trade is bespoke, isn't it? Because if the market's more volatile, your stop loss is further away, so you're less likely to be stopped out. And your position size is smaller, so you don't risk losing more money just because your stop loss is further away, and vice versa. Okay? I didn't invent it. Every single hedge fund manager we spoke to said, yeah, that's what we do. And if you think about it, it's logical. It had to be what they do. It couldn't be anything else, because the stop loss can't be some kind of fixed number of points away for Apple compared to, say, sterling US dollar. They're too different. It had to be based on volatility. So what's number three? Number three is, you see that distance from there to here? And you just tell your broker, I've got an entry. We'll come to entries in a second. I've got an entry, so I'd like to buy at this price. Stop loss is at this price, because the computer tells you you've worked it out, 2.75 times average true range. And here's some important things. The flip side to that, he says, lost the mouse again. The flip side to that is this. So you see that distance down there to the stop loss, the mirror reflection around the entry, the green line's the entry, by the way, okay, is this part, which is where you'd add to your winners. Winners add to winners. You take some of your profits and you add to your winners. Now that's ingenious. I didn't think of it. It's ingenious. You know why? And I didn't come up with the term winners add to winners. A hedge fund manager did. You know why? Because it means you could start small, because you know you're going to, if you get profits, add to your winning position. You're only risking profits to open the second position, the stop loss of which is there, or the system tells you anyway, does the maths for you. Okay. And why is that brilliant? Well, it means that you're letting your winners run. And guess when that comes in really handy? Remember we showed on that chart how the market had fallen sharply. Sorry, remember we showed on that chart the big wins, small losses, big losses. Well, this is when you're going to want to dip. By the way, that's short. It's fallen to 29.27. 29.27 is where it is at the moment. The FTSE, first time in, well, 4 days. It's actually going down. Okay, so that is why you want to add to winners and not take your profits really quickly. Because if you get a big trade like this, that's one of your big wins, not just for the month, but might even be for the year. And I want you to write this down. 80% of your profits will come from 20% of your trades. 80% of your profit will come from 20% of the trades. Well, if you're going to be a multi-billion dollar hedge fund, because that's what's the case for them. And I've never seen somebody successful where that's not the case. 80% of your profits at the end of the year will come from 20% of your trades like that, which just went in the right direction. Okay, so we've now got winners add to winners. We've got winners add to winners over here. Okay, now, here's an important point. A few more nuances to give you on that. 4, trailing step stop loss. What does that mean? Your stop loss is going to be trailing, not dynamic, but stepped. Stepped means when the price goes from here, only when it gets to here does the stop loss then move from here to here. Okay, it doesn't just trail dynamic with every small move, because that doesn't give enough room. Let me remove some of this. Enough room for the price to move. And between the two things, we found it to be better. Okay, whoops, pointer options, erase all ink. Okay, so trailing step stop loss. Now, if you are a beginner compared to advanced, if you're advanced, that's what you do. Trailing step stop loss, winners add to winners. If you are a beginner, this is how I start my apprentices in my firm. That will become fixed stop loss, and that'll be a fixed take profit. But Alpesh, we would have missed the FTSE trade and it skyrocketed. Yeah, but you're a beginner. Let's just work on one thing on Selma at a time. Okay, let's just work on the entry first of all. Not, oh, I've got to add to winners, I've got to put stop. No, we'll just do this. You'll make less money, but at least it'll be simpler. And then you can graduate to the advanced level of trading step stop loss and adding to winners. So initially, you'll just have a fixed take profit or fixed limit order and a fixed stop loss. Just makes life that much easier. Mike, I always use MT4 because it's more ubiquitous. We'll create coding for MT5 if people really want it, but you can have it on 4 and you can then trade on 5, or you can trade through IG or CMC or Saxo or Intertrader or Interactive Brokers. Who you place the trade through doesn't matter. You don't have to place it through the screen because the prices are ubiquitous. They're everywhere. Okay. On that, so it wouldn't and shouldn't matter what platform you're using to get it. We used MT4 because it was just everybody's got it and it's free as well. I know MT5 is free as well. Okay. Somebody just asked about cable going all over the shop. It is going all over the shop at the moment. We'll come back to cable. Oops, we've got quite a bit of volatility going on. I think it's more price data than the market. So that's the S&P 500 so far. Let's keep an eye on it, see if we get a sell signal or not. But for now, it's spiked up, then it spiked down. It's now settled. So we'll see if that's just data. But yeah, as people start hitting the markets, let's see what's happening. Now, how does that look with something happening right now? Let's look at JP Morgan, because the whole point is it doesn't have to be Forex or indices. It can be stocks. Same principle applies, and we're trading. So that's a momentum on the 10th of February. Most importantly, we'll come to entries in a second. Didn't call the bottom. I didn't call the bottom. I didn't know the bottom. Okay, and I'll show you why in a second. That's momentum. And then we got to this. So that's the point at which it just touched that. Okay, just touched it. So going to add to that winning position with another position, either of the same size, also known as skyscrapering, or half the size, pyramiding, or double the size, which I wouldn't recommend, which is inverted pyramiding. I just came up with those names: skyscraper, pyramiding, inverted pyramiding. What I mean is you're normally just going to do the same size, and its stop loss will be down here, and all of that's written out here anyway. But you can do it all manually. So the one thing you can't do manually, because I haven't told you yet, is get the entry. So let me tell you the entry. Okay. How do you know when to enter? And more importantly, the business plans. We're going to do the business plan next and then the entry. Can I ask something of you? We've spun out from my hedge fund. Some of you will know this if you've been on my webinars before. Let me know if this is your first time on my webinar. Kenneth has said CPI high. And you can see, Kenneth, we don't keep looking at macroeconomic data. We're not trying to outsmart the market. Now, you might say, hang on, Alpesh, you're not trying to outsmart the market. But 90% of the time, wait a minute, I saw that you were on the BBC talking about the markets. Are you saying that you don't actually follow the data? No, being on TV and talking about data, right here, I was explaining to, well, I was the oil price. And she said, oh yeah, you got that right. I said, yeah, because all we do is we just look at the trends. We didn't look at we're not big enough to have thousands of analysts. We can't outthink Goldman Sachs. I'd be stupid to think that I can. And anyway, they've got more money, or JP Morgan or whoever else have got tons and tons more money, and we would never be able to outgun them. So we ride on their coattails once they move the market. We spun something out. We were doing this, and then Barclays Bank approached me and said, have you thought about spinning out your fintech? We'll incubate it. We will get venture capital investment for it. And eventually, if you want to IPO it, we'll IPO it. And I said, no, we're in the hedge fund business. We're not in the fintech financial technology business. It was a chap called Biku Alawalia, and he's become a best friend of mine. Actually, I'm seeing him in 2 days in Paris. And I said to him, no. And he said, well, you've already got the tech because you're training your staff with it. So we spun it out, and we're hoping it's going to be a great tech company, which will be like the next ChatGPT. I don't think it'll be that big, but I think it'll be pretty big. This is from Winton Capital. Does this not look familiar, what we just showed you with real charts? That actually, we got the buy only after a lag. The trend starts down there. We don't have a crystal ball. We can't see the bottom. We can't see this. We don't want to go in early because the market's still falling. We can't see the bottom. We don't have a crystal ball. We get in after a lag, and people go, a lag? That's rubbish. I don't want a lag. I'm going, well, please leave. You know, this is from Winton Capital. They're based out in Hammersmith. The other great thing with the hedge fund industry is when I first started, we had to get an office either in St. James's or Mayfair. We're still locked into our Mayfair rents, which are about 15,000 a month for basically a room for 4 people, 5. Okay. St. James's, I think we were at one point when we first set up, we were paying just 600 a month, which good old days. But it was in St. James's, so you know you had to be. Now you can be in Hammersmith, you can be Baker Street. Brevin Howard are on Baker Street. You get cheaper rents. Now you can be anywhere in the world, which is one of the good news things, that you don't have to pay that rent. And I think as soon as we can, we'll probably move out of Brook Street, although I do like it. It's so posh. Amazon. Okay, so what does it look like? Like I said, please distinguish between a winning streak and how much you're right and wrong. People are obsessed with how often you're right or wrong. And I say, well, best case, 7 out of 10 on average. Worst case, 3 out of 10 on average. An average, probably slightly more than 50-50, better than a coin. But, and here's the point, the wins, the trends which are called, whether they're long or short, should be bigger than the losses. That's all it is. And if they're significantly bigger, then you can afford to be wrong a lot more than you can afford, or than you have to be right. I wish I'd written that down. It sounds really good. The wins in any strategy that you're capturing, the trends that you're getting right, should be sufficiently bigger than the ones you're getting wrong so that you can afford to be wrong quite a number of times. Do you see? That pays for, I could have had 5 of those and it would have been fine. That. Now, I didn't move the markets. It's what they gave me. I could only take what they gave. That's not realistic. That's not typical. It's just that I was asked what was the last month like, last month of 2022 like, and I pulled it up and I said, oh, actually, it was untypically good. Why untypically? Well, it could have been reversed. Well, we wouldn't have had losses that big because we would have got stopped out very quickly. I don't think we've ever had the reverse of that ever. So that's the point. So let's get now to the entry point. How do we enter and what's the business plan of how much we can make? Like I said, when I wrote this, because I was a student and I wanted to meet the world's leading traders, because I was going to leave practice as a barrister, which eventually can be very lucrative and make you millions. Well, I better meet the world's leading traders if I'm going to do this. And I actually had to do it to assure my parents that I'm making a clever decision, because otherwise they're not going to just let any kid at university just go away and do what they want. You know, most parents, particularly Indian ones, are going to say, well, have you thought this through? Show us you've thought it through. Where's the evidence? So, well, yeah, here I go. I met some of the world's leading traders, and that's, you know, commitment. And that's what happened. And one of them was Bill Lipschutz, whose chairman at Salomons was Warren Buffett at the time. Bill was global head of foreign exchange at Salomon Brothers. So basically the world's largest forex trader. because that's the world's largest bank in Forex trading at the time. Okay, so he was that. Now he was hedge fund manager of the year more recently. And this is what he taught me. First thing he taught me was, well, before I tell you the entries, Alpesh, you need to, or one entry type of strategy you could use, because people like him have strategies up the kazoo. So one type of entry strategy you could, before I tell you that, you need to know whether it's worth it or not. So let's do the business plan first, and then we do the entry. Then we'll do the Q&A on brokers and everything else. Okay. Arvind, Andrew, I've got some questions for you. I will answer them. I'll answer them partly because, he's asked, what time frames would you suggest for someone who has a day job? The 30-minute and 1 hour bars are perfectly fine with a day job because it lasts more than a day, the actual trends. Quick question for later. Can we use Hargreaves Lansdown for trading? I wouldn't recommend it because they're built for investing, so the commissions are way too high. And we'll talk about brokers in a second. So I wouldn't use Hargreaves for trading because they're not geared towards trading. They're geared towards investing. They'd love you to trade with them because you'll rack up so many commissions. So that's my mum, honorable visit on every webinar. The reason I've written Road to Rich is it's a bit tongue-in-cheek. It was Bill knew why I'd come there. You know, think about it. Young student goes to Global Head of Forex at Salomons and says, look, can I interview for a book by the FT? He knows what I'm really there for is how do I get rich, Bill? I grew up with that silver spoon in my mouth. So the joke was, oh, you've come here as your road to rich, haven't you? So first thing he did is, well, let's work out the business plan. Is it all worth it? That's the first thing we need to know. How much money can you make so you can decide if it's for you? And at the end of this, you might decide, this isn't for me. I don't want to do this. It's not enough or whatever. Now, he and I likened it. I'm not sure it was him or Bernard or David. One of the leading traders in the world likened it to driving. Learning to trade was like driving. When you're learning to drive, it's a new skill, and you've got to look at the wing mirror, the steering wheel, the rear view mirror, the brake, the clutch, the gearbox, lots of things. Just like when you're learning to trade, you've got to look at stop losses, entries, take profits, adding to winners, and so on. Okay, and it seems overwhelming. Yet you learned to drive, didn't you? Yes. So you can learn to trade. It's not like brain surgery, which you need some innate ability, or weightlifting where genetics will help. It's something you can learn. Everybody from low IQ people to high IQ people can learn to drive. You can learn to trade. It's that simple. So we had to remove the obstacles though on it, right? Which is hence where this comes in. Because when I'm hiring staff, I can't hire Goldman Sachs people. We can't afford it. We're a small fund, even after 15 years. We're certainly not $1 billion assets under management, which is when we could poach Goldman staff or whoever, JP Morgan staff. So this is what he said to me. He said, look, let's work out a business plan. He said, a business plan is to determine whether in life you should be doing something. And even if you don't have that money today, the idea is you will have it eventually if it's worth doing. So I said, okay, that makes sense. So let's assume, he said, you've got £20,000. I didn't have that. He said, because if you don't ever plan to have that, then there's no point starting. And if you do plan to have it, you need to work on that basis, not how much you've got today. So maximum loss, 1% total capital. So assume you had 20,000, which you don't. Okay. And I didn't when I was a student interviewing Bill Lipschutz. Okay. Maximum loss per trade will be 1% of 20,000, which means maximum loss per trade will be £200. Okay. Let's say you won a bit better than a coin. So 60% of your trades would win and 40 would lose. Okay, a bit better than a coin. And we'll tone all this down in a second. We're really going to tone it down and you'll go, oh, okay, going to make it really realistic in a second. Average loss, therefore, will be £200. The average win would be £300 because winners add to winners. We're going to pick a strategy where we make more when we win than we lose when we lose. Otherwise, we wouldn't have that strategy. We'd ditch it. That's an essential core component of the strategy. Okay, so 100 trades. Just assume you do 100 trades. How often? I'll tell you in a second. This is just the businessman. So that would, on this, mean you got 60 times £200 profits, £18,000. At which point I said to Bill, call my parents. I'm leaving university. This is more money than I've ever seen in my life. This is all I want to do. This is all I want to do. I mean, you can imagine as a poor student, you see this and you think, why the hell am I at university? Screw university. Whoa, I just want to do this. And he said, calm down. You've still got your losses to account for. And I said, yeah, but even if I've got my losses to account for, okay, that still allows net profits of £10,000 per 100 trades. Okay, that's still £10,000 per 100 trades. I told him I want to be a day trader because that was all the rage back then. When this was written last millennium, okay, that was still all the rage. And even after 25 years since I met him, he just became hedge fund manager of the year a few years ago. So you know still on the ball, let alone Bernard, who's doing incredibly well, and David and all the rest of it. Okay. So I said, I want to be a day trader. I want to be a day trader. I'll do 100 trades a week, 50 weeks in the year. The other 2 weeks, I'll probably be on my private jet or yacht, I was thinking. 5,000 trades per annum, that is. 100 times 50 is 5,000 trades per annum, which at £10,000 per 100 trades, I'll make $500,000 a year, Bill. He looked at me like I was insane, as he rightly should have done. And what you're all thinking is exactly what he was saying, which is, calm down, Alpesh. We're not going to make 90% of that. We're not going to do 3/4 of that. We're not going to do 2/3 or a half of that. We're not even going to do a third or a fifth or 15% of it. So let's tone it right down, this business plan. Let's say we just did 10%. Okay, that would be £50,000. Way too much still. What Bill said to me, you're not even going to do that, sunshine. You're going to keep your day job. You're going to be a day jobber, not a day trader. You're going to be a day jobber. You're going to keep your day job. You're going to do 100 trades per 6 months, which is, guess what? 1 a day or 5 a week. As I told you, you might batch all 5 on a Monday, spend 1 hour in front of the computer, pick 5 trades to do. Okay. 200 trades per annum, which at £20,000 per annum, £20,000 per annum is a lot less than the 50K. Okay. It's not 10%. It's about 4% of the business plan. Wait a minute. That's still too much. Remember what I told you. Our goal is 500 a month. And you say, why are you holding us back, Alpesh? Trust me, it's a fast Ferrari you're going on the motorway with. Let's just do it in a Tesco car park in a Honda instead. Okay, £500 per month. So even 4% is too much, because we're going for about 12,000 a year, which is about 1.8% of our business plan. If you've got a business plan where even if you hit 1.8% of it, you're still doing well, that's my kind of business plan. Okay, because it means there's margin for error, huge margin for error. So then I said to him, hang on, that's all good. He was actually trying to stop me from dropping out of university because it would have been on his shoulders and my parents would have gone ballistic. He said, okay. I turned to him and said, well, if this is true and these numbers are right, then how come everybody isn't rich? Then that's what you should be asking me, because it's what I asked him. And he said the key reasons for failure were bad teachers, bad mentors, slight difference between teacher and mentor. Okay, mentors for life. A teacher is, I'll teach you for a weekend, now bugger off. Okay, and bad strategy. So let's focus on the strategy, the entry. How do we get the entry? Because we talked about the exits already through the stop losses. So how do we get the entry? 100 trades per 6 months. There's my mum again. Okay, £20,000 per annum. Wrong. You're paying attention, then you would know it's 500 per month we're going for. We're not going for 20,000 per annum. So we've dialed it right down. Initially, you're going to start with a demo account until you're consistently profitable. And so you know you've learned the skills. Why? Because in a way, what I'm saying is I'm going to be your driving instructor. You're going to sit in my car in the Tesco car park. I'm not taking you on a flipping expensive car on the motorway because you'll crash and burn. I don't want you crashing and burning because you'll blame me for it. And I don't want my reputation going up in heaps because you've crashed and burned. So I'd rather you started off slow and became profitable, because again, you'll blame me for it when you're profitable. Actually, you'll probably take credit for it yourself. So what are we going to do with the entry? The entry we're going to do, he said to me, is this. You don't have the analyst, Alpesh, he said, or the brain power to outsmart the market and know where it's thinking. You're not going to try and step in front of the market and know whether it's going up or down, right or left. Okay, what you're going to do instead is ride the trends, whichever direction those trends are in. And that FTSE continues to fall. So the FTSE is now at 79.24. We'll see if it goes below that low point since we started the webinar. So that'll be interesting, because remember, we've had that short for ages. By the way, before that, if I go back on the FTSE, there was a great short there. Before that, there was a long, which we didn't get at the bottom. We just couldn't. The market gapped higher. But there was a short before it, which we didn't get much of because then it bounced up higher anyway. But the long was good. The short there was small. That's all right. There was a long there, which was okay. But the short was a lot better there. And that, that long was really good. So it's been it's been a really great month. And that's why we think this next trade to the downside on the FTSE will also be phenomenally accurate, because the rest of them it just keeps getting it right. So we'll see if it drops below that low point of 79.22-ish, I think is the low down there, or 79.20 during the course of this webinar. I mean, just out of interest, doesn't make a difference either way. If you're short, you're short. So what? Okay, so we're going to ride that trend. We're not outsmarting the market. The market moves first, and then we just ride the trend that's been created by the big money people. It's what I talk about in my talks, wherever I am. I mean, not on Newsnight, that's different. But it's the strategy that I adopt when I'm talking. So let's talk about that. The entry, and then finally Q&A, and then we're done. Okay, entry, Q&A. So the entry is really important. So he said to me, you're going to have to measure the strength and momentum. Okay, and I said, well, how am I going to do that? I'm a poor student. I can't afford expensive software and tools. He said, well, what we're going to do is we're going to use the strategies all hedge funds do, which is we're going to look at, for measuring momentum or trend starting, is we're not going to look at one indicator. We're going to look at multiple indicators, but not the way the textbooks do. Okay, not the way the textbooks do, but we're going to use those same publicly available tools. It's a bit like I'm going to create artificial intelligence, but I'm going to use the English language or coding, which already exists. Just because the English language exists, you could be a William Shakespeare, for God's sake. You know, it doesn't mean that the tool, just because it's widely available, is useless. So we're going to use the tools which are already out there because I was a poor student, but we're not going to use them the way the textbooks do. And the other thing we're going to do is we're going to filter across multiple indicators. So we need lots of boxes ticked in our due diligence to say, oh yeah, trends pointing upwards because of this, because of this, because of this. That should limit the number of bad trades we have. We won't eradicate all of them because Donald Trump might do a tweet, or Elon Musk or somebody, and move the market. The next thing he said we're going to do is we're going to look at that over multiple timeframes. And finally, we're going to do something else, which is PC. And then we ourselves added, thanks to modern technology and Microsoft Azure, we added PR, but that's different. I'll tell you that in a moment. So I said, how are we going to do that? He said, what you're going to do is you're going to look, is the price closing near the high? Okay, is the price closing near the high? And I said, well, what do you mean? And why? He said, well, if the price is closing near the high or low, it has fallen below. There you go. It's fallen right below. So that's short, coming along nicely. Thank you very much. If the price is closing near the low, then it's likely to go lower in the next period, he suggested. It's not guaranteed, but it's likely to. And similarly, if it's closing near the high, it's likely to. So we got the computer to just keep an eye on that rather than us doing it. But if you're doing it manually, I said, well, how am I going to do this manually? What, with a magnifying glass? Because if it closes near the high, it's a bit like those auctioneers. I've got 70, anybody give me 80, I've got 80, anybody give me 90, I've got 90, and you give me 100. It's more likely to go higher. And he said, well, there's multiple tools available out there. None of them work. I said, well, that's bloody useful. He said, of themselves, but you're going to use them differently. So, for instance, there are tools out there which will tell you if the market's making higher lows or higher highs or closing near the high. All three things would imply the next period that the price is more likely than not to go up, but not guaranteed to. I said, well, I still need to know what am I supposed to do. And he said, so use the tools which are available, but not the way the textbooks do, because obviously they don't work by themselves, and filter according to all of the tools. So if you use, for instance, tools which are available out there, but not the way the textbooks do, so the MACD, stochastic, RSI, because they of themselves don't work, but you filter across to make sure all of them are moving in the right direction. I said, well, wait a minute, you said they don't work. He said, yeah, but you're going to filter and you're going to make sure they're flat to rising. No textbook ever tells you that. I said, why? He goes, because some of them are lagging and some of them are premature. But at the point where they're going from flat, you see they're going from flat to starting to rise. Flat starting to rise would imply you get the timing a little bit closer. Not guaranteed, but a little bit closer. So what we do is we looked at multiple indicators, write that down. Not the way the textbooks do, because we looked at it flat to rising. So RSI, stochastic, MACD, okay? Not the way the textbooks do. And somebody wrote to me and said, oh, MACD is useless, doesn't work. I said, yeah, none of them work often enough. They work sometimes, and we're not using the way the textbooks do, and we're filtering. So we're only using them when every single one of them points in the same direction of momentum. Then you get some validity out of it, because it's not just relying on one witness, you're relying on three. So you have one unreliable witness, you have second unreliable, third, all three saying, no, we confirm and corroborate that it's moving in the right direction. You get your odds slightly more than 50-50, which is all you're after. Okay. Second thing, you did it across multiple timeframes. So if you're looking at, say, the 4-hour time frame, you look at the next time frame along and see same thing. Is it flat to rising on the next time frame along? Because that suggested there was a trend longer term moving the prices higher, and the short term trend. They add to each other and lead to bigger moves. They lead to bigger moves. Not guaranteed. Nothing's ever guaranteed in trading, but there was an increased probability you're going to get a bigger move. The FTSE, well, I'm glad we did short it. Well, you saw it. Anyway, it's good you saw it. on air live, as it were. Saw the sell. Now it's fallen even more. We're at 79.19. Let's see what happens. Got 3 down arrows. That's just the traffic light. It just tells us where things are in terms of strength. It's got a couple of greens, which means it could be bottoming out, but we'll see. Probably will fall a bit further, but let's see. If we got really worried and we didn't want to follow the signal, we might just take the profit, as beginners often do. Okay, multiple time frames, multiple indicators, multiple time frames. And the third thing was PCPR. What's PC and PR? PC is price confirmation. You need a 2-period high. Now, we again get the computer to tell us, is there a 2-period high? Why a 2-period high? Because it means somebody else has seen it and put money behind it, and the trend has continued from when we saw it. And without that, you will fail to make money, because you'll get the first 2 things happening, multiple indicators, multiple time frames. But if you don't get the price follow through, you'll just get a bad trade. So price confirmation is probably the most important. So what's PR? PR is pattern recognition. You don't need to worry about it. It's something we did to tweak our indicators and the signals we use using Microsoft Azure, which is it's a clever Microsoft tool in the cloud which can absorb an immense amount of patterns or data. And then we look to see if there's any which are similar. So we don't just look at, like Japanese candlesticks, hanging man, 3 periods or whatever. We go back 14 to 20 periods to see if those images are similar to anything else in the Microsoft library, and then what happened. Now, that's still too little data, but it gives us a little bit of information when sometimes it says, oh yes, this is very similar to what happened before, and it led to this happening. Then we put a little bit of weight into it, not a lot, but a little bit. That's pattern recognition. The word speaks for itself. Is it something unique? Is it brilliant, earth-shattering? No, none of those things. But if it gives us a bit of an edge to go from 50-50 to a bit more like 60-40, then fine. It's still being finessed, and you don't need to worry about it. But it's just so you know, it's the one thing that we spend most of our time on the development side, is the pattern recognition side, because the other 2 things are pretty straightforward and simple. Okay. This is a talk I gave at Bloomberg. And we asked the audience, where are you all from? Just to get an idea of what people are interested in trading. And you've got entrepreneurs, but we were surprised. That's a very small number. The others were retirees, students, and everything else, which was interesting. I perfected this when I was at university. Well, I say perfected, we're still working on Microsoft Azure didn't exist back then. Red Carnation Lost Exam, won some awards. That's me on the business page of the Financial Times. Wrote some books to raise my profile, because the FT said when I won the competition, would you like to write some books about trading? And I said, yeah, because it'll raise my profile. If I have profile, I can raise capital. Raising capital is the hardest thing I do. Raising capital, we got Aegon and AXA as pension funds to invest in our fund. And we have a private equity fund, hedge fund side. And Luxembourg is the domicile for the private equity stuff. And raising capital, I hate. You go around asking people, you're flying out to Switzerland and wherever, Dubai, whatever, and you come back 90% of the time with no. Just do, because Goldman Sachs went before you, and JP Morgan, they're seeing after you. So why would they say yes to you? As I said, won various competitions, and the FT said, would you like your own column in the paper each week, diary of a trader? And I said, yeah, okay, that'll help raise profile even more. Merrill Lynch HSBC did a collaboration. They paid, amongst others, them and a few others ended up paying me about $1 million to license the what I'm telling you now and the outcomes of it. And that paid for the first set of offices. And that's me when I had hair. First set of offices were in St. James's on Waterloo Place. And the second time was Linen Hall, and eventually now where we are on Brook Street. So we went from cheap to too expensive. What's the best time frame? It's the 1 hour. Now, that might change, but at the moment, it's definitely the 1 hour. By the way, Brent crude, yes, I just got a WhatsApp, has fallen off a cliff. There you go. It's now at 84. Thank you. That's good. So that's where it is. It's at 84 at the moment and looks like it'll fall further on Brent crude. Okay. Oops. There we go. Put that out of the way. Now, why? Well, we gave our traders in the firm, I said, look, I just want you to do 25 trades in a month, or however many you get the signals on. So in a typical month, they'd get 25. Some months they'll get 40. Some months they might only get 18 decent trades. It's up to them. I mean, if they don't get a decent trade, they don't have to do it. right? Net pips capture, that's winning minus losing, 2,250, but there's a massive variance. It's not guaranteed like a bank account. I wish it was. Some months you might get 4,000, other months you'll get a negative. You might get a negative, i.e. you've lost, okay? Best winning streak, 70 winning trades out of 100, like tossing a coin, 70 heads out of 100. Worse, 30 out of 100. In fact, I want you to toss a coin today 100 times and see what happens with a coin toss. Okay, so that's what happened to us. This is when we knew we had something big, $1 billion business potentially. It's not a billion yet, but potentially, hopefully it will be. We said, well, what if you did $2 a point? The typical stop loss exit became 50 points. So you'd lose $100. But $2 is too much, way too much. The only people who ask you to start off will ask a beginner to start off with $2 or £1 a point are the people who are getting kickbacks from a broker and selling you subscriptions. If somebody asks you, start with £1 a point, okay, ask them, do you get kickbacks from the broker you're recommending? And are you selling me a subscription? Those two things will always be true, okay, let alone if they ask you to do more. I want to start with the demo account, and not with $2, but with 20 cents. 10% of that, because then you're just risking $10 if you're wrong. Not bad for an education. But more importantly, if you did do $2 a point and you got 2,250 points in a month, you'd make $4,500, wouldn't you? Right? No. We said 500 a month is what we're after, which is why it doesn't have to be $2. It can be 20 cents. That's when we knew we had something for the retail market, because $4,500 is not what we're targeting, because beginners will get something wrong and they're trading too large, they'll lose money. Why not start smaller? Once you've built up, you know you got the skills and you've built it up and you built up your profit chest, then you can worry about, oh, now let's move up to $1, $2, okay? And that still gets you to your $450 at 20 cents a point, or your 500 a month. That mathematics and breakdown is incredibly important, because how many people would have had a flourishing career as a trader, but because they started too large, too soon, thought, oh God, no, this I'm going to be destroyed. Bit like me entering Wimbledon, you know, without any coaching. I'm going to lose in the first round. Whereas if I had wonderful coaching and better genetics, I might actually have won. So then Barclays said to me, why don't you put what you've already got as financial technology, why don't you put that into something you spin out of the hedge fund? And they gave me the examples of Jeff Bezos, hedge fund manager who set up Amazon, went into technology. And I said, yeah, but I need to go run the business. And why would I do this? And then they said, well, it's potentially $1 billion business. You're just spinning out technology out of your firm. Obviously, they wanted the business because they would get the venture capital raising, investment banking money. They would get the IPO money and all the rest of it. And once they said, well, they showed me the maths why it could be $1 billion business, I thought, we want to do this. We want to really do it. And I said, well, I don't want it to be a subscription, though. I don't want people paying every day, every week, every month, because that goes against everything I've ever written in my newspaper articles and everything else, which is I hate bloody subscriptions and people offering those when you can get so much stuff for free. By the way, Amazon just went nuts and then fell back again. What a day to be doing a webinar, good or bad. Okay, so jumped up, and then, I mean, that's a 13% variance in 1 minute. Somebody mentioned CPI figures, which presumably is one of the reasons why. I've got 2 times leverage on Amazon for my investments, both on CFDs and ETFs, but that's a separate webinar we're doing on Monday on that. So I'm not going to talk about that now, but we'll come to it. Oops, oh God, I've just closed the Amazon thing. That's a bit stupid. Oh no, here it is. Okay, got it back again. No, I haven't. Doesn't matter. Okay, so what did we do? How did we come to terms with that? And what we did is said, I want it convenient. I want it compatible with work. I don't want hotel costs. I don't want travel costs. I don't want live trading practice. I want live trading practice so we can look over people's shoulders while they're trading and see what they're doing right and wrong. I want it built for the students and use modern technology like Telegram, Zoom. Initially, when Barclays came to me with this, we didn't have Telegram or Zoom. They didn't actually exist. It was Skype. And they called it, or Biku called it, pipspredator. That's Barclays' name for it. Buy when the price goes above the horizontal line, because that confirms this price momentum and the odds of profitable move have increased. Arrow alerts you. You can get it on a phone to alert you, but we prefer not to because people then overtrade, we've discovered instead. Okay, so we took the first strategy out of the hedge fund, we spun it out into some financial technology, which we think as a hedge fund which invests in other companies, if we invest in our own and spin out our own thing, then surely we're making more money because it's a spin out and you're not having to share it with anyone. Can it make money? Well, I'll show you some in a second. Is it easy? Well, you follow the signals. There's a manual. There's actually a course that you can do, which is free with it. But you don't have to. That's more if you want to become a hedge fund manager and get a certificate and learn. But you just read the manual and follow the signals, and then send us over Zoom or in calls with me what you're doing, so I can get you to profitability. The more people who get to profitability, the bigger the valuation of my company. The bigger the valuation of my company, sooner we get to making a lot more as a venture capital invested company, and so on. Checklist, simple rules. So let's go through some of that. This isn't mine. This is from a while ago when Bhikkhu first started, and he wanted to prove the point to me, and he did 5-minute bars. I don't like 5-minute bars. So he started off with this. Now he's well-to-do, and he built quite a few profits up. So he started doing $30 a pip. Not started on day one, but eventually within a few months was doing that. So don't you do that. That's him. Okay. And he proved the point that it could be done. And, you know, because I said to him, well, it's one thing somebody who's applied for a job in my fund to learn how to do it, but it's different for just the mass public. And he gave me examples of why that would work and convinced me. Anyway, like I said, he was best man at my wedding after a few years on this, because he was right. Gets to the heart of the matter of trading by clearly elucidating the methodology of successful trading strategies. People want endorsements. They want to know, okay, what do independent people say? Well, you don't get more independent than chairman of the Chicago Board of Trade. I don't owe him anything. He certainly doesn't owe me anything. And his reputation's on the line. And it's printed on the cover of the book, okay, where I interviewed him and the others, clearly elucidating the methodologies of successful trading strategies. Because if he's wrong, it's his reputation that gets destroyed. And the same with all the others. Somebody asked me, goes, what are the independent reviews? Well, we got reviews from customers, but that wasn't happy enough for them. And then we did videos to show them these are real customers. People weren't happy. Then we did this with the biggest names in the industry and evidence on Financial Times book. So it's their you know, neck on the block. Then they were happy. Without an indicator, this is what you're doing. With an indicator, it's like this. Okay, so that's what we did. This isn't automated. You've still got to place the trade. Why? Well, it removes all the menial tasks. It narrows down the trades you should be looking at. Okay, that Amazon one's sort of vanished. I'll bring it back up again. There it is, but I don't know why I can't make it go up. I'll work it out later anyway. So it was there, but it keeps going. I've got the other Amazon anyway, which is long on that one. Oh, by the way, that's another hedge. You might go long on the 30-minute and short, for argument's sake, on the daily, depending on if the signals are there in any event. Okay. So what we did is we narrowed those trades down. So you just focus on trade selection. Where's the smoothest trends? Like the FTSE 100 just seems to be right. We'll focus on that. And you might say, well, why can't programming do that? Well, if you can find a programmer who can mimic the human brain. So what it did is with the indicator, we removed all the menial tasks for the trader. We removed where the stop loss is. We removed how much money and how much risk you're taking. We removed the trade selection because it showed you which ones you should be looking at. Then they decided, actually, I'm going to go for the FTSE and not Bitcoin. For instance, that was up to them. Wanted to give them a degree of independence. Now, the reason we wanted to do that with our own staff is because they're allocated indices, currencies, stocks, or whatever within the team. So they couldn't all do the same thing. But also, that's the skills development. The human brain can see better. So they could see, yeah, actually, I want to get the next trend on this one. It's just too simple and smooth. The computer, we're looking at ways of doing it, Bollinger Bands or whatever, to see if there's a way of automating even that, but it's just not happening. For those who want to be part of this, now I've given you the manual rules, multiple indicators, multiple time frames, flat to rising, MACD, stochastic, not the way the textbooks use it though, flat to rising, okay, stop loss, volatility based position sign. If you want the computer system to do it for you, and you want us, Zoom, including me, Zoom mentoring you, okay, looking over your shoulder, no subscriptions, then I take on batches of 25. I take on batches of 25 because I want to get to 1,000, and we're about 875 so far. I want to get to 1,000. Okay, who have gone through the program. They're in it for life, and there's no ongoing charges. All upgrades are free. Daily updates on Telegram to see which ones we're monitoring. The reason we want to get to 1,000 is then we get venture capital. We've estimated at a valuation for the company of about 30 to 40 million US dollars that we'll see when we go to them. Some of them, it might turn out more. It might turn out, they might laugh at it and say, haha, give you 10 million. Okay. And then eventually in a few years, float it, IPO it. And I want everybody who's an apprentice on this to have free shares, and it's subject to what the lawyers say. Okay, and I don't think they'll have a problem. I don't see why they would, but I'd want them to have free shares in it because they'll be the best ambassadors, as we've already found when they do the reviews for it. You trial it. I'm going to give you 2 bribes for trialing it. I'm going to give you signed copies of 2 of my most recent books, yours to keep, just for trialing it, because we want more and more people. The only thing I ask you is give us an honest review at the end of it, okay? Even if the review's just loved it or just 2 words, okay? And the other thing is, whenever the VCs asked you in due course, please just take the time out to give them a review of it, because otherwise, what's the point of having everybody on? So that's the first thing. That's Bhikkhu. That's what he looks like. He left school at 16. So we're not talking you've got to be a financial whiz kid to do any of this. He's sort of the co-founder of it in a way. And when he was at Barclays, he's left Barclays now lives in Dubai. Love the pipspredator. Thank you, Bix. It was his idea. And I think it's going to be bigger than the fund. And the fund, we've managed to get to about 90 million euros assets under management, which is peanuts, as you'll know, for a hedge fund. After 17 years, like I said, we go in after Goldman's and before JP Morgan every bloody time. We want to get to 1 billion assets under management in 10 years, but we'll see. Similarly with this, want to float it because the numbers are there. We take 25 licenses per event. Why 25? Well, because my secretary's worked out, if I take on 25 at a time, I'm not overwhelmed and I'm mentoring them. And if I get less than 1 email in a day from a mentee, then she allows me to do another webinar and take on another batch. So it all varies, and depending on what I'm doing with my other work. Why am I doing the webinar? The reason I'm doing the webinar is Steve Jobs' principle. When he launched the iPhone, he goes on stage. There is nobody who can be as passionate and as determined for somebody's success as the person who's behind it, whose brainchild it is, whose legacy it is. You've got not 7 days, not 14, not 21. You've got 30 days to trial it out. Again, you can do it all manually if you wish. We just created this software, and that's our ambitions, as I said at the start, for the company and what we want to do with it. But that's why we created it. Okay, the Bitcoin, we've got, somebody just asked me about the Bitcoin trade. 1 second. You can do it with Bitcoin, and that's why I put it up earlier. That's the daily. Why daily? Because I've got a long-term position in it, and you'll know earlier this year I put on my Telegram that I'd gone long on Bitcoin. That's short. Might not sell my long-term because the long-term is meant to be for 10 years. Either it'll be worthless or it'll be worthless. We'll see. But that's where that is on the trade. I'm not taking that trade because I've got the long position. I'm not planning to take the trade on that just for that. Microsoft is still strongly up. Where are we with all that volatility? There you go. Oh, sorry, I should put it on screen. So, and that's what it is. And I'm going to show you, something really, really exciting. What metrics can we use to select? The same thing, Arvind. It's trend following. It's all the same. We're following trends. We're not investing for 12 months. We're following the trends. And so that's Microsoft. What are the metrics? Multiple indicators, multiple timeframes, flat to rising, price confirmation, boom. It's trend following. So you get the long signal there, 12th of January, and by the 14th of February, you're up 236 to 270. What is that? 10, 12% unleveraged on that. If you're using CFDs, you might be up 20% on that because you did 2-to-1 leverage. That's where you go to sign up for our software. There is a free course. There's 2 free courses included with it, 12-week course and a 30-day course. They're intended there to make you into sort of hedge fund level if you wish. Now, some people don't wish, okay, and that's fine. You don't have to do them. You can just download it. We've got 24-hour support line. It'll be me who'll be your mentor. That's why I limit it to 25 at a time. We will eventually, now this is a one-off cost and all upgrades included. In the future, and the venture capitalists have indicated to us this is what they'd want to see on a business plan in the future, but it won't impact you guys because you're part of the first 1,000 charter members. In the future, and we'll cap the number of shareholders who are customers to 1,000. Otherwise, we'll dilute away too much. In the future, it'll be £2,000 a year for the mentoring. Actually, it might be 4,000 a year for the mentoring, 4,000 a year for the software, but not for you guys. It's fixed because you're the first 1,000 charter members. But it will have to move to a subscription model, sadly, because that's what the venture capitalists want. But then it'll be a global thing. Now, at that stage, I won't be the mentor for other people. For the first 1,000, I always will be for life. But obviously, when you go global and you've got people from all over the world, you know, if you go from 1,000 to 10,000, it won't be me. There'll be a team of people, which is why we're raising the capital for it. And also, we're raising the capital just to tweak the software and get to more versions and so on, because it is capital intensive for us as well, or for me rather as well. Brent, yeah, I can show you Brent crude again. There it is. It's fallen a bit further, 84. That's where it is. That was the short. Did we know it was going to fall? No, I didn't know this morning when I woke up it's going to fall. We follow the trends, and that's what I did when I was on the BBC. I just said that's what our indicator was doing. There's multiple videos, including webinars on Saturday. So you don't just get contact with me one-to-one through the Zooms and me looking over your shoulder because you send me the trades you're looking at on your demo account, but also on Saturday, I do an 11 a.m. webinar, 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock on stop losses, then on entries, then on limit orders, then on money management, then on trading psychology, then on adding to winners, so that you can communicate with me all the time. We do a WhatsApp group. We've got a community channel as well, which we've now moved on to Facebook because it's just so much easier and geared towards community as well. Like I said, as well as the software, we created this 12-week program. This is what I created for my own staff, and then I just upgraded it, amended it for all of you. You don't have to do the free course, which comes with the program, but it's very structured. Week 1, week 2, because we just took what we were teaching the stuff in my fund, which actually wasn't my idea. It was Bicker's, but I wish I had thought of it, because actually if you're creating software and you're then spinning that out, it's a multi-trillion-dollar market, the retail online trading market, multi-trillion-dollar. I know it is, because that's why that was an international bestseller around the world. It's a multi-trillion-dollar market. If you're disrupting that by giving people tools which are professional quality, but you can't charge them professional quality, you can't charge them Bloomberg terminal prices because the retail client can't afford that. You're better off getting those clients in and then floating the darn thing and getting more of them and doing a volume play at a low price and getting the VCs to pay into it than trying to get to retail and saying to retail, oh, we're going to charge you $5,000 or something daft. Okay. Oh, we've got a few of you coming in. Oh, by the way, as you sign up, let me know and I'll give you a shout out. Liam, you are through. Oruna, you're through as well. I can see that. Carlos, I can see you are through. Can we try to trade directly? Irvin, yeah, you just pick the broker and you trade through any broker you choose. We can help you with the broker, but yes, you're trading directly. What you're doing, you're in control. You pick the broker, but we'll tell you which brokers are regulated. Like you might say Saxo, Interactive Brokers, CMC, IG, or whatever. Some are better than others. Intertrader. There's loads. pipspredator software includes handholding. Yes, exactly, Jay. It includes, this is what people don't get. It includes lifetime handholding, lifetime Zoom calls, unlimited. Now you might say, hang on, and this is what people said. How can you afford to give lifetime handholding? How can you do that? And I said, it's really simple. Think about it. If you're profitable, which I know you will be, how do I give you an insurance guarantee that you're going to be successful? Simple. I put a noose around my neck saying you'll get unlimited help and the money back guarantee, and you get to keep the books and the trading journal and the USB and all of that. Even if in 30 days you say trading's not for me, still get to keep all the goodies because we're that confident. Because we had to show our confidence. You might say, why not just give it away for free? So we give it away for free. People will say, especially the venture capitalists, it's worthless. Simple. Anything that's free is always worthless in everyone's mind. It's a perception thing. Why not charge 10,000? Because you're retail clients. Nobody has 10,000 to throw around. So we found a sweet spot which would make the venture capitalists happy that we've got a proper proof of concept. By the way, when you go to alpeshpatel.com/here, excuse the site. Bhikkhu actually told me to design it like this. He said, if you want to grab people's attention and do something, and it does work on the Mac, no ongoing costs, free upgrades. There will be once we get past 1,000, but not for you guys because we're not at 1,000 charter members yet. Lifetime mentoring, yes, and from me. Actually, we've got another hedge fund manager we've taken on the team who will also be helping you. So it's 2 for the price of 1. Me and him will be helping you. Is there a new version? It's version 4. Is there an Excel for the trading journal? We give you a template, but actually most people pick their own template. Because some people like lots of detail on the Excel and some just say, oh no, I'm just going to take. So some will say date, instrument, long, short, entry price, exit price, profit, reason for trading it. So we do have that on the 12-week course where you can just download the Excel template. And others just send me screenshots. Some put screenshots on Excel spreadsheets, which is a bit weird, but we don't mind. Whatever works for you is the best as well. Have you moved away from currency pairs and trading? No. The reason I'm showing stocks is just because it's more relatable to some people. Some people just prefer, they get the word stock. If I say currency pair only, then they might say, oh, I don't want to do that. So that's the reason. It's not that I've moved away from currencies. Currencies are actually far more advantageous because they're liquid. The spreads are just so much more narrower. If we just look at, currency spreads. But I just felt if I keep talking about currency spreads, people can't relate to that as much as they can to Microsoft. but I certainly would prefer if they looked at currencies, because they're just, the spreads are next to nothing. Even on sterling yen, which is one of the widest spreads, you know, it's, you can see it there, and that's one of the widest. Okay, whereas cable is where's cable gone? I had it a minute ago. There it is. It's what, 4 basis points there. So it's not that much, 4 pips rather, is there. Yeah, he said, make sure you put in big red writing, hurry, because then people will go on. And we do discount it for the webinar, and click with big yellow button. I said, yeah, but it looks a bit crass. Anyway, you can do split pay, still get instant access. My ambition is, like I said, float the company, and it's either the hedge fund which gets to $1 billion or this does. And the reason is because they're numbers and they're worth doing. I'm a teetotal vegetarian, so I'm not going to spend the money. It's just to build something. Okay, it's just something to leave as a legacy and say, well, this is what I did, and something that I know something about. And also, it's because there's a demand for it. Thank you. The next batch, I've seen you come in. Eddie, yours has come in. I don't know if I said to Carl about yours. Oops. Other questions that have come in. If there's any questions that I've missed, let me know. Quick question for later. Can you use, so for trading, don't use a traditional ISA or SIP broker, because they're geared towards higher commissions, because it's buy and hold. So you'd use a normal FCA regulated broker. It's got to be FCA regulated, otherwise you're in big trouble if it's not. Okay. So that's critical. Jay Paresh said he'd send me the links. Oh yeah, I'll tell him when I get back to UK. But it would, no, Jay, you're talking about investing. So we have, this is trading. This is the trading software. Okay. Jay, you're talking about investing. So we have an investment program. We have 2 programs. Trading, where you're holding things for a week, 2 weeks, and investing, where you're holding things for 12 months. Okay, they're 2 completely different things. And we have 2 because they're the 2 things you can do in life, trade or invest. So Jay, you're talking about investing. This is the trading webinar. The investing webinar is on Monday, where I look at what I'm buying for the longer term. Thanks, Arvind. I will make sure we keep a space for you. Please do let me know, anybody who's not doing it immediately, because then I'll set aside a space for, you know, until end of tonight for you, because otherwise, once it's gone, and I don't want to be overwhelmed with stuff, work as it were. You can use money in an ISA, so you can, yes. You just got to make sure the brokerage commissions are low enough, but there's nothing stopping you trading in an ISA. We just got to make sure the brokerage commissions, but imagine initially you're going to be doing a demo account, so you don't even need to worry about any of that at the moment. Okay, we don't need to worry about that. Just a bit of a backstory. That's my 2 ambitions. Not that any of you care. It's to be in one of those 2 lists. Okay, got to have a goal, got to have a purpose, got to do something useful. And as I said, well, yeah, somebody asked me, has it been independently verified, as opposed to just the clients who've got videos on your website of how much they love it? And I said, yeah, independently. There you go. There's one amongst, there's a whole bunch of others. There's, you can't quite see it on there. There's Jack Wigglesworth, chairman of Life, Phil Flynn, Bernard Oppie, the hedge fund manager. This is great, magnificent job, practical, useful. Okay, Mark Slater, former MD Merrill Lynch and head currency trader at Salomons. Mind of Trader successfully captures the character of its subject. This together with Alpesh's insightful commentary combined to make excellent reading. Okay, so we've really taken what was taught and put it into something which can be used. And I stole an idea from 2 other billionaires, those 2. You might not like them, that's up to you. They were taking on apprentices. This is effectively, I will call you when, oh, by the way, as soon as you sign up, I'm going to send you an onboarding email within about the next 10-20 minutes, because I'm going to just catch up with the markets first. And so it'll be me and I'll call you my apprentice. So forgive me, some people are in their 70s. I still call them my apprentice. And some people are not in their 70s. Shorter timeframes. I don't mind shorter timeframes. If you look at 5 minute, I'm going to open up the 5 minute on sterling US dollar. I prefer you didn't do 5 minute, because there's just tends to be a bit more volatility and noise on it, as you can see there. And whilst you may well capture some of the trends, it just seems a lot of work. And from our analysis, it's a lot of work for getting those gains, because the trends on a 5 minute don't last as long, do they? Because it's 5 minute bars. So, but we'll hold you through all of that as well. Yes, Neil, I'll save you one till 10 p.m. tonight. No worries. I know sometimes people are at work and stuff and they need a bit of time. And that's an amazing webinar. Thank you. You will also be attending next week's webinar and we'll make a decision then. Hopefully that's why. That's okay. Yeah, Anas, that's fine. I'll hold it till Monday, depending on whether you want to be on trading or on investing. They're two different programs. And I assume also, Jay, whether it's trading or investing for you, do get investment support too. Kappa's asked, do Pips Predator members get investment support? No, they get trading. It'd be unfair, wouldn't it? Because if you're on the investment program, you do get trading support, but not the other way around, because the investment program, people make, it costs more. So the investment program, I give them trading support, but I can't for the trading program give them investment support, because we'd end up, people will just do the cheaper trading one. And you might say, well, why is trading cheaper? Well, because trading's open to a bigger audience. People get it, whereas investing is really for people who've got 20, 30, 40,000 pounds and they're looking at longer term investments. And we've got some people with 10 million in them. So it's just because the audience is different. So it would be a bit unfair, because it'd mean they bypass one for the other. Okay. Obviously, I'm not going to say to them, no, not helping you at all. We'll engage with them. We'll say, okay, look, do this, but we can't give them like all the investment data and let them into the private investment Telegram. Oh, by the way, there's a private Pips Predator Telegram channel, but I couldn't let people on Pips Predator into the private Telegram channel for investing, where I show them what I'm buying, what's in my portfolio for the long-term investments. So the long-term investment stuff does have to be a bit Chinese walled, I'm afraid. Please hold your place until after I've attended the investment. Yeah, absolutely. No worries, John McNutty. I'm booked for next week's investment webinar. Can I make a decision? Yeah, absolutely. There's quite a few of you want to make a decision. Perfectly fine, my friends. Just let me know, and I'll make sure that your names 1, 2, 3, 4, 5. I think there's 5 of you like that, and that's perfectly fine as well. That one's on Monday, whether it's investing or trading on that one. So don't worry on that. If there's any other, Irvin, thank you very much. Very interested. Jay, thank you. So just let me know any other questions. Otherwise, I will call it a day. Thank you, everybody who's been on for this. What I normally do at the end of these is go backwards so people can just quickly see the slides that they might not have done. Oh, by the way. So week 1, profitability versus dropout. So week 1, you normally get 1 dropout, 1 in week 2. And the most common reasons are training's not for me. I've got really busy with life. And I say to them, well, don't forget, it's yours for life. So you can come back a year later or 2 years later. So some people just lock in the price and then leave it for 2 months and then come back. And that's perfectly fine with us. We give them daily updates if they want them and everything else. Now, those who've traded before will be the 25% who are profitable on day 1. At the end of this webinar, you're going to get a link. You're going to download the software, you're going to set up the call with me, all the rest of it. The ones who've traded before and are really proficient will start being profitable straight away. That's about a quarter of the people. For those who are total beginners, it might take up to 12 weeks before they get to that stage. And the reason is they might have never done it before. They might not have ever even looked at any of this ever before. And this is, I can't say this is typical only because we'd need a data set of 1 million people to make it typical. But this is what happened when we did it with one cohort, just to see how it turns out. Now, we don't do this with every cohort, but that's looks like, from our experience, looks accurate for what happens with all the other cohorts as well. Okay, so I'm going to go through the slides. If there's any questions I missed, let me know. Can you please do the same? Yeah, absolutely. No worries at all. Thank you, Suzanne. My pleasure. Thank you, Suzanne. Thank you. Delighted. Is there any combination of both programs? I'm interested in both activities, trading and investing. John, I'll email you afterwards. We'll work something out for you. Absolutely. No, I understand. We have got quite a few. I'd say about 25% of the people who are on the investment program are also on Pips Predator. 25% are on there. But that doesn't obviously work the other way around. It's not 25% of Pips Predator are on the investment, because the trading one is open to, it's just more people trade than invest for whatever reason. But yeah, 25% of the investors, might even be more, are on Pips as well. They like to trade. And there's a reason for that. I'll tell you what my reason is. If I'm investing, let's say Microsoft, and last year, Microsoft, Apple, Amazon, Disney, Visa, all the rest of them didn't do that well last year, and I had to hold cash for most of the year. But at least I was trading, so I could make money. Okay, and if you followed me on LinkedIn and Telegram, you saw that one of the best trades was sterling US dollar. It was absolute killer. That was Pips, that made the money, whereas the investing side was holding cash for a lot of last year. So that's why mixing trading and investing works. Now, what if it's the other way around? What if you have a bad week and you're just not making any money trading, or a bad month? Well, then you know, hey, like this past month, oh, hey, it's okay. I've got my SIP and ISA, which did really well this month. So it's psychologically, I found that trading and investing both psychologically help support each other. You don't get the FOMO that if you're only doing one of them. So we get, like I said, about 25% are on the investment program are on the trading one as well. But like I said, the investment one on Monday, I'll also be going through my what's in my portfolio at the moment, why I picked it, and what I like, and so on, and that kind of stuff as well. Mike, suggested brokers, FCA regulated for this. You've got Interactive Brokers, you've got Intertrader, you've got CMC, you've got Saxo. I'd say with CMC and IG, just a bit careful. They spike the prices in the middle of the night. They'll deny it. But I've had so many clients say, oh, the price spiked. So I prefer, say, something like Intertrader, who are straight through processing, and also Interactive Brokers are good. Oanda aren't bad if you're outside the UK. They're pretty good as well. Okay, thanks for the reply, and more so for getting to hear you today. Oh, thank you so much. Thanks, Whale, as well. Siddhant, thank you all very, very much. So this is just a recap. It's like end of class recap. So let me know, and there's the links. So if you want to download copies of Mind of a Trader and Investing Unplugged, you can download free copies. I've done about 18 books translated into 8 languages. And I once did a 3-book deal with the Financial Times just because people just wanted this knowledge. Now, as you might know, this week, I hit 100,000 followers on TikTok. The demand is clear. It used to be the demand was in book format, which is why, I was really proud when I had an international bestseller. Now you get proud when you got 100,000 followers on TikTok. I know it's a weird world, but that's the world it is, and it's fine. I mean, Elon Musk buys Twitter. You might think, what's he doing playing around with Twitter? So there you go. Okay, guys, I'm going to leave it at that. Thank you very much. You can see on screen where you can download free copies of the books, and everything else is on there as well. And I've made a note of everybody else. I'll make sure Shireen has got a list of all those names for Monday, so they keep that behind. Everybody else who signed up for today, please wait. I've kept all the seats except I think it was 5 of you who said you want to wait till Monday. I kept everybody else. Everyone else is gone. So now I'm afraid if you try and sign up, I don't think it'll go through. But don't worry. I'll probably do another one in a month or so, or 2 months. I don't know. The final thing is any questions, just keep posting them on here. I'll still be able to see them even when I've signed off. All the people who signed up today, thank you all. As I said, you're going to get an email personally from me with a video. You'll know it's from me because it's a personal video from me on there. And what you'll see on that video is me onboarding you. And I'll mention your name so you know it's me, because I want to get that across to people. What's unique about this is I mentor, some of them I mentor their children, some of them I mentor them on business, some I mentor obviously on trading. But sometimes people sign up on this because they say, well, actually, the idea I had was what makes us different is we'll mentor you on absolutely all the other things in life, whether it's careers. I've got some on careers, I've got some on business, and so on. So a dedicated website, and on that dedicated website, you'll see all the stuff on there, including testimonials as well. Whoops, there we go. And the testimonials are in video format. It'll load up in a second. So you'll be able to see the videos with clients. The reason we did it on videos, by the way, is because what we found is this chap made 10 million. I said, people aren't going to believe this if it's just a quote and a couple of initials. You're going to have to give them more than that. You're going to have to give them, you're going to have to show them how they actually made the money and sort of do the video recording of it. And what they did and how it was done. So anyway, we did a whole bunch of videos for that as well. Okay, so that's that. And oops, video unveil. I'm going to tell the team on that one. We'll look through that. But we've got a whole bunch of reviews and industry reviews, because sometimes people said, oh, well, I want independent ones about your work and all the rest of it and so on. So we did the client ones and that, and then people Twitter. I don't control Twitter. Okay. As I said, videos you can see there, and then what people have said just generally about work and stuff, because you've got to be able to due diligence somebody on a whole host of stuff. So a few more reviews. Oh yeah, here we go, even more reviews. So we put it all into case studies, and then people like Bank Privé Edmond de Rothschild, so Rothschilds, when I was speaking to their audience about what we do and how we do it as well. Just so you know, Merrill Lynch, BBC, Financial Times, all the rest of it, Barclays stockbrokers, as well as customers and clients and all of that. And yeah, because people need to know. I think due diligence should be everything. But like I said, mentoring is everything. So on LinkedIn, when you join in, we've had people whose kids I've helped through a virtual internship to get jobs and so on, all the way to their business help. Vast majority don't need all of that. Vast majority just want to trade, and that's that, and that's fine. So yeah, like I said, a whole bunch of reviews, and then we've got some more recent ones. That one came, I think, this morning from Chris Rushton as well. And so anyway, you've got a whole bunch which come through. So really pleased with all of that. Thank you. Any live seminars planned? John, I did a summer school in Spain last year. But we're planning one again in Spain this year, but it's not, there's no dates or anything set as yet. Thank you, Jay. Thank you very much. John McNulty. Okay, thanks for the reply. And once again, oh yeah, we've already done that. Okay, everyone, I'm going to go, but I will email you if we do fix that. It's just a question of timings on all of that and when to fix it up. So yeah, probably do a live one. I mean, if you say the demand's there, then I'll do it. I mean, when I hear it from somebody on a webinar, then I know, oh, actually, there might be demand for this. Maybe I should do another one, a summer school, or just, I don't know, 2 hours in the morning at a London hotel, just a couple of hours to go through stuff. Maybe that's a good idea. I've not done one of those for ages. Sometimes I do it at other people's conferences, but that's ad hoc when they come up. So maybe sort of do that when, yeah, I mean, you know, you've said it, so maybe that's a good thing to do. Okay. Yeah. That's it. Okay, everyone. Thank you all for being on here. Thank you for everybody who signed up. Really appreciate it. Love the fact that you signed up. And I have just got to, let me just remove that. So everyone who signed up, you're going to get an email from me in a second, and look forward to turning into profitability as we do with our staff. And look forward to meeting you all. Oh, by the way, I do a monthly networking as well. I'll let you know when the next date's set. I did one in January, did one in December, did one in November. It's a new thing I'm doing. It's on the Strand. So it's, you know, I had to pick Central London, and I will send you the dates when I've picked the next one up for February. Hopefully I'll do it in February. There's only 2 weeks left, so it might be switched to March, but I was trying to do it each month, and we just get together. There's no speeches. It's networking. It's 80 people from the industry, including a bunch of hedge fund managers to corporate types in the city, as well as pipspredator and great investments program people, and we just eat samosas and talk markets or whatever, and it's just networking, and they get to meet each other and they get to talk to each other as well, people who are on the program, who aren't on the program, as well as just good business networking. Because like I said, there's everybody from hedge fund managers to city folks, everybody from people in their 20s to their 60s. So it's good. It's about 80 people at a time, and I'm there, of course, as well. So I'll let you know. I'll post it on the Telegram channel when I've got the next one set up. It'll probably be in March now, because I don't think I'm going to get it done in the next 2 weeks. And like I said, it's just networking. It's not. It's from like 6:30 till about 10. And it's just drinks and, like I said, samosas and pakoras and Indian food. Forgive me. But it's in the Strand, so you might like, and I just know how much British people love Indian food, so I thought I'll go with Indian food. Personally, I would go with chips and pizzas. But okay, everyone, thank you all very much indeed, and thanks for being here today, and thanks for your time. And like I said, any questions, just keep posting. If something occurs to you after the event, just post it, and we'll take it from there. Thank you.